The tax deduction for making charitable donations is changing in 2026, both for non-itemizers, but also for itemizers. If you itemize your taxes, you are going to want to know about this change. It's going to impact your planning. I've got the math on how this change works and what the rules are. That and more coming up. The rules are changing when it comes to getting a deduction for making charitable contributions, and some will like it, others will not like it. I shared this in a video just recently about this change because it's sort of moved the yardstick, if you will. It's always been that if you're making charitable donations and if you don't itemize your taxes, then you're not going to get a benefit. You're still supporting the causes you care about, and yet you might not get a tax deduction for it. But if you itemize your taxes, then yeah, you would get a deduction. Well, starting in 2026, that's sort of still true, but it changed the line and moved the line just a little bit. If you don't itemize, starting in 2026, you are now eligible for up to $1,000 tax deduction if you're single, or $2,000 if you file a joint return. What do you need to do to be eligible? That donation needs to be a cash donation made to an eligible 501c3 charity. So cash donation to a 501c3 charity. So Goodwill donations or Salvation Army, that sort of stuff doesn't count. Okay, it's got to be a cash donation. So think cash to the church or cash to a cause that you care about. If you don't itemize, you can get a $1,000 deduction or $2,000 deduction if you file a joint return. But that's if you don't itemize. If you do itemize, my understanding is you don't get that above the line deduction. You miss out on that. Well, that's fine, right? Because you're itemizing. You get the deduction there. This is one of the biggest changes, and it's going to catch a lot of people by surprise. The new rule, if you itemize, there's now a floor. There is now a floor similar to, if you are familiar with this, the out-of-pocket medical deduction. For out-of-pocket medical deductions, that's one of the things that you can claim on your itemized deductions, your Schedule A, but you only get to claim your out-of-pocket medical of what exceeds 7.5% of your adjusted gross income. So it's a pretty big floor that you need to surpass. Therefore, a lot of people aren't eligible for this. Well, they're introducing a floor for charitable contributions as well. Thankfully, it's not 7.5%, it's 0.5%. So it's not a big floor, okay, that you need to get over, but it still is meaningful. And this is going to impact and likely should impact your planning. If you itemize your taxes, you now are only able to deduct your charitable contributions that are above 0.5% of your adjusted gross income. Taking a look at this math, if your adjusted gross income is $200,000 and you make total charitable contributions of $2,000, you're only able to deduct $1,000, right? Because 0.5% of $200,000 is $1,000. Therefore, that's the floor. You're not able to deduct your first $1,000. You're only able to deduct what's above that. And in this example, if you donated $2,000, you're only able to claim as an itemized deduction those $1,000, the $1,000 of your charitable donations. This is going to be even more significant for those that have really high adjusted gross incomes, right? So the higher your adjusted gross income, the bigger that floor is going to be. 0.5% of 400,000 is obviously bigger than 0.5% of 200,000 and so on. So this is going to mean that you are limited in some way, depending on how this math shakes out for you. It's going to mean that your charitable deductions are limited. Therefore, what's the planning strategy? One, and we're seeing a lot of this, that yeah, the majority of taxpayers do not itemize their taxes. But now, thanks to the cap increase on the state and local taxes, okay, that is another one of the things that you can itemize and add up on your Schedule A itemized tax return, tax form, that it used to be that you were capped at $10,000 of property and state and local taxes, okay? Well, they lifted that threshold up to $40,000. And therefore, we're seeing not a ton more people itemize, but more people itemize. And if that means that, well, you itemize and you're just barely over that threshold, then so be it. But if you're barely over that threshold, and go back to this example, your adjusted gross income is $2,000, you're married filing jointly, you do $2,000 in charitable contributions, but because you itemize, you're just over that limit, well, you're not able to deduct the first $1,000, only the next $1,000. Well, if you didn't itemize, the charitable deduction would have been better, right? And so there's an individual that I was delivering his taxes last week where he was able to itemize by less than $1,000. It just barely worked. And I flat out told him, hey, if this is where we are next year, we're not going to have you itemize your taxes. You're going to get a better deduction overall by getting the above the line charitable deduction and not itemizing. Between the two, that would lead to a better deduction for you. I know that's only going to be a sliver of the population, but you need to be aware of it. And if you're just doing TurboTax or you're not doing tax planning, you're not proactively looking at your tax picture, you're going to miss out on this benefit. The other planning strategies, if you're close, you might want to bunch your charitable contributions. This doesn't apply to everyone, but this is where you could open a donor advised fund, okay? And then take 2 to 3 years of what you would be funding and giving to charities and do all of that in 1 year. Yes, it requires cash flow. So maybe you've got a commission or a big bonus, or maybe you've got some other resources where you say, you know what, we can bunch our charitable contributions and do 2 or 3 years of charitable contributions all in 1 year. And it happens to be in a year where maybe our adjusted gross income is manageable. Therefore, the floor that we need to exceed is moderate. And because we did 2 or 3 years worth of charitable donations in that 1 year to our donor advised fund, we've got very big charitable deduction, and therefore our itemizing is really, really meaningful. Versus, and then the next year, because you're not making that same 2 or 3 year charitable contribution, then you get your standard deduction. But over that 2 to 3 year time period, you've been able to optimize. Bunching your charitable contributions makes a ton of sense. And then for those of you that are age 70 and a half or older, we talk about the qualified charitable donation a lot. This makes it even more valuable, right? If you are itemizing and you're over age 70 and a half, making a qualified charitable donation directly from your IRA, directly to the charity, those dollars don't land on your tax return. Versus, so therefore, it's not that they're deducted, it's just not even counted as income. So yes, it's deducted. You get the tax benefit. Versus if you claim it as income and then have to deduct it, well, by deducting it on your Schedule A, you've got this hurdle that you need to get over, this floor you need to get over of 0.5% of your adjusted gross income. It would be better mathematically to just do that qualified charitable donation directly from your IRA, directly to that end charity. So rules are changing. If you are charitable, making charitable donations, and you itemize your taxes, you need to be aware of this new floor that exists for your charitable contribution so that you can plan ahead. Work with your certified financial planner on this. See if it changes your giving strategy. See if it changes your overall tax planning strategies as well. And you want to do it early in the year so that you don't show up a year from now and say, oh, well, I could have done things differently and optimized this. No. Know about it now. Prepare for it now. Plan ahead right now. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneystore.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.